Yo, what's up you guys? Welcome back to another weekly market update, and today I want to give you guys an update on the current situation that we have in the market from both a technical and a fundamental perspective. But before we get there, let's go over some of the questions that I have received over here. We have to go back 2 days. I think it will be here. Okay, here we go. So Matteo saying another Rolio video for the week coming up. Thank you, bro. My best mentor ever. Thank you very much. You're welcome. Clean analysis on EU, UJ, and AU. Hope you got into those setups because I saw everything went exactly as anticipated. Mr. McDoomza saying thank you, have a blessed weekend. Thank you. It's actually I know you say that back then. Mr. Prince, thank you, Rolio, for being consistent with your uploads. I've learned quite a bit from your videos. You are underrated, my friend. Thank you. Thanks, brah, for what you provide to your following. Keep it up. Thank you. That is make 70. Okay, buy YouTube views. You saved my hours of effort with just a 4-minute video. Thanks. You're welcome. Tren Ven, thank you for your efforts. Love your simple way decor, the room, by the way. Thank you, efforts. Love your simple way decor by the room. I'm not sure you guys, but that was not in my room. I was sitting in the kitchen. I'm in the room again now. Mr. Branton saying, hi Rolio, thanks for the content. What's the correlation between the US 10-year bond yield and the dollar index? So the 10-year bond yield is an indicator that is, well, it's a, it's an indicator that is used by investors to determine the overall direction of a country's interest rate. So if you do see a higher 10-year yield, that means interest rates are likely to go up. And because of higher interest rates, that means that you can expect a stronger dollar. So high treasury or high yield gives you a stronger dollar, because we know that high interest rates tend to attract investors. So whenever you see 10 years, just think of interest rates and think of high interest rates, strong dollar, low interest rates, weaker dollar. So today we had some PPI data that came through positive for the index. I do expect a pullback in the market now, and that is exactly why I decided to make this video. So you guys remember I did this breakdown when the market was sitting at this level, and I explained all of the reasons why I wanted to see that head and shoulders pattern that the market kind of gave us. It didn't come as high as I would have loved it to, but we got that move down. The market is now currently testing these very important structural level that we have spoken about here. This level over here acted as a level of resistance. Market broke above that, tested it as support twice. Then we now have a strong impulse. After an impulse, you expect a correction. And the best way to obviously measure that correction is simple, by taking the Fibonacci from the high to the low. And what we have here is we've got the potential confluence of the 0.382. Now, this is obviously a structure that the market had broken below, and this level over here acted as a level of support. The market broke below that. All of that supports now turned resistance. Now I do expect the index in the short term to pull back slightly, obviously back to that level over there, and then from there we obviously have to wait for a news update, which is what I am expecting to see in the market tomorrow, which is the inflation data. Next up, we've got the US oil. Now the US oil had basically just closed this gap that it had opened with. I do expect the market now to slightly continue lower and then go higher, because what we have here is we've got the strong level of structure that the market had created. This level here acted as a resistance, broke above that, tested it as support didn't hold. The market never came back to test that support as a resistance. We had this massive gap opening there. I expect the market to fill the gap and then continue higher. Next up, we have got gold. Gold just went exactly as anticipated. I do still expect gold just to go up slightly more and then definitely give us a pullback over here. So as I said before, and then till there, because this is where the market most recently created structure. This level over here acted as a level of resistance, and the resistance got broken and it's now turned support. Next up, we've got the Nasdaq. Nasdaq just reached the structure that I spoke about on Sunday. As you can see, I said we can expect this market to continue higher, and that is exactly what the market had done. From here, I do expect a pullback. What the market had printed is known as a W formation. After a W formation, you expect a pullback to the neckline before the continuation to the upside. So I do expect this market to pull back, and then from there I'll give you guys another update on what we can expect next as well. Next up, we've got the Dow Jones, also a pullback expected over here, but this market is very interesting because we have this market that had broken above this very important structural level over here. But apart from that, we have an impulse. After an impulse, you expect a correction to at least a 0.382, and in this case the 0.382 is lining up perfectly with this previous level of resistance over here, or support that got broken, tested it as resistance didn't hold. So we do expect a pullback to that level, and then from there monitor the price action once again to give you guys an update on there as well. Guys, that is it from my side. If you have any questions, drop them down in the comment section below. Thank you for your time, and as always, cheers for the ears.